So another Wednesday, and welcome to episode 2, which is the second vlog for Wednesdays with Harry J. But on today's vlog, we're going to be talking about mutual funds. Should we stay at home and do this vlog, or we should head out? Okay, let's head out.
Are you going by bus or you?
I will enter into the mouth of a fish.
And let's talk about mutual funds. Wait, let me get ready before I tell you the meaning of mutual funds. So for the pants, I don't know whether I should go with this or this, but before that, let me go with this. But before that, what is mutual funds? Mutual funds is a type of investment where investors come together, put in money, and they give it to a professional investor to help them invest. One thing I want you to know about mutual funds is that it's diversified. Is that you have different pools of it. There are different type of investments under mutual fund. That's why I will advise every beginner to always start investing with mutual funds. So let's talk about the type of mutual fund, but before that, let me put on my pants. Okay, so the type of mutual fund, we have different type of mutual funds. We have equity funds, we have bond funds, we have money market funds, and we have balance funds. So let me explain, let me break it down for you. Okay, equity funds is ownership. It's like the stock market, whereby you buy a certain amount of a certain shares of people's company, making you the owner of that company. Let me say you buy Dangote shares, you are now an owner in Dangote. So that's where that's what equity bonds is all about. It's about stock market. It's about buying shares from other companies and making you an owner. So that's the meaning of equity bonds. It's actually good because it's higher investment, but the risk is there, but not that much. And then we have bond funds. I know most of you, when you hear bond, you'll be like, what's bond? I want you to know something though. I am not an investment banker. I'm just a girl that likes making money easily, quickly. So let's go to bond. What is bond? Bond fund is loan, your normal loan. It's like you loaning the government or the bank or any type of commercial people. It's like you loaning them money. I say, okay, I loan you this money, you're going to give me an interest, and I get my money back by this certain amount of time. Okay, that's where bonds come. And when we have different type of bonds, we have government bonds where you loan government money and then they give you back an interest. And we have commercial bond when you loan companies money to do stuff, maybe to pay their workers, and then they pay you back with an interest. And we have monocular bond. Those type of bonds is where you loan the local governments. Those are very common in the US. And so, wait, let me wear my top. I'm running late.
Simbuekes, feeling funky.
For the top, I don't know whether to go with this or this. Let me go with this, the blue and green. So let me change. Cheese. Okay, I think this is good. Looking good, looking sleek. So the next type I'm not playful. So the next type of mutual fund we have is the money market mutual funds. I know you guys be thinking money market. So let me break that down for you. The money market mutual fund is the type of mutual funds where investors come together and then they invest in a long time or a short time financial instrument. So what is a financial instrument? As you guys know. Oh, some of you don't, but let me break it down. A financial instrument is examples of financial instrument. We have the treasury bill, number one. We have bank deposit, we have commercial papers, and we have certificate of deposit. But I'm not looking good, so let me change my hair so you guys will be feeling me.
I don't have that kind of time.
Change my hair, put eyelash and all this, because my sisters are here and we're about leaving. So where did I stop? Let me break it down for you. The type of money market mutual funds. So under the money market mutual fund, I've explained to you what the financial instruments are, and we talked about treasury bills, we talked about bank deposit, we talked about certificate of deposit, and we also talked about commercial papers. Now I'll be telling you about treasury bill. Treasury bill is a loan you give to the government. I know you people be like loan, but bond too is also loan. But here's the catch. Treasury bill is a loan you give to the government without interest. This type of loan, you give it to you buy the loan from the government at discount, no interest. You are paying okay, I'm borrowing this okay, I'm borrowing you 195,000, and at the end of it all, at the end of 6 months, you're going to pay me 100,000. That means you are giving them a loan at discount. That is the difference between treasury bills and bond. Bond is interest, treasury bill is you selling to the government on discount. You get it? So let me get ready. These girls are here. Let me not waste their time. Oh, yeah, my Latifa, I love it. One thing I want you to know about treasury bill is that it's a short-term type of loan you loan the government. That's the difference between the treasury bill and the bonds. It's a 91-day, maybe a 120-day. The highest you can go is 270 days loaning the bank that money. And another type, loaning the government, sorry, that money. And another type of money market we have is the commercial paper. This type of loan, you give it only to companies so they can help pay their staffs. Maybe companies are out of cash and they don't want to go to the bank to take loan. They come and they present a commercial paper to people and say, oh, please give us 97,000. At the end of the day, we'll be giving you 100,000 at discount. That's the meaning of the discount. Then after that, another type of money market fund we have. Is the certificate of deposit. What is certificate of deposit? It's what we call fixed money. All this money that you lock in your piggy vest and you say, okay, let me lock this money for this period of time and they'll give me this interest. That is certificate of deposit. Then we have another type of money market, which is the bank deposit. Let me explain short definition of bank deposit. It's the process whereby you keep money in your bank. You just keep the money there for safekeeping. Let's get to the venue and let me continue. We're here already. So the type of bank deposits we have your savings account, your current account, and your fixed deposit. All this money that you put in your account is safekeeping. You are safekeeping it with the bank. And that's all we have for the type of money market funds. The last type of mutual funds we have is the hybrid funds. This type of fund is the combination of the bond and the equity. You know about this. So I think that's the last type of mutual funds we have. So let's talk about the risks of mutual funds. Mutual fund is the type of investment that higher the profit of the mutual funds, the higher the risk.
Take the risk and join the millionaire. Okay. This is a risk we are taking. If you take the risk now, you become a millionaire.
Okay. So mutual fund is something that a beginner should go into, a beginner investor should go into, because it's a combination of literally every type of investment, and you are giving it to a professional to help you invest. So before borrowing that your boyfriend money,
This will never pay your bride price. This will never marry you.
that your girlfriend money,
Stop.
money, I would advise you to borrow the government. I would advise
Get out there. Man. Don't advise me. I don't need your advice.
you to borrow companies, so at the end of the day you will have interest. And some of you that are new to this and you're saying, which app should you use? For me, I use app like Plutus New is an Afro Invest app. I use Bamboo and I use Rise. I use Rise for real estate investment. That's all for mutual funds, and today is another Wednesday with Holiday. Today is all about investments, because everybody out there needs to know how to invest and when to invest. And make sure when you want to invest, you don't invest all your monies, because there are ups and downs of investment. Today there is gain, tomorrow there may be losses, but I would advise you to keep your money for long term so that you see the gain. It's another Wednesday with Holiday, and cheers. See you next time.